Hello student, this is the MCO program, MCO 5 course code in Block 2 Analysis of Financial Statements. So, in Analysis of Financial Statements, we shall discuss on Unit 6, that is Fund Flow Statement or Statement of Changes in Financial Position. The statement of changes in financial position, it is a statement which outlines the causes of a change in the financial position of a company or a firm during an accounting period. Now, the financial position, changes of the financial position means here we have to compare the financial position of the previous year and financial position of the current year. So the financial statement, that is the balance sheet of the previous year and balance sheet of the current year to be compared. Now, changes in the financial position, the causes is the movement of funds. The movement of fund, that is, it may be inflow of fund or outflow of fund. The inflow of fund means the fund coming into the business, and outflow of fund means the fund going out from the business. So, it is also called a fund flow statement, and which the inflows are shown as a source of fund, because inflow means the fund collected from different sources. These are shown as a source of fund, like in the balance sheet, in the liability side, the sources of funds, that is the capital, that is issue of debenture, issue of shares, raising of loan from the bank. So these are the etc. These are the sources of fund which are coming into the business. These funds are coming into the business. And on the other hand, the application of fund, that is balance sheet asset side, the fund which is collected from different sources are utilized for the purchase of fixed assets, for the repayment of loan, for the redemption of debenture, for the redemption of preference shares. They are the outflow of fund. So, there is a change in the fund. The fund, that is the how much fund has been changed from previous year to current year, that is reflected through fund flow statement. Say for example, in previous year, the amount of fixed assets was say rupees 1 lakh, and the current year the same amount of fixed assets is showing by the balance sheet is rupees 1,50,000. That means the 50,000 fixed assets increased. That means there is a outflow of fund. That means additional fixed assets have been purchased for rupees 50,000. So that is there is a movement of fund, that is outflow of fund. Similarly, if we discuss about the share capital, say previous year there was 1 lakh amount of share capital, equity share capital, and the current year the amount of equity share capital, say for example, is 2 lakhs. That means the difference is rupees 1 lakh. 2 lakhs minus 1 lakh. So this 1 lakh is the sources of fund. That means inflow of fund. That means the firm or company has issued additional equity shares to the public, and thereby the fund has been collected from the public. That is sources of, that is called source of fund. Now, what is the meaning of fund? Fund may be classified in 3 categories. That is, it may be capital in broad sense, it may be cash or bank balance in narrow sense, it may be working capital in popular sense. So, the fund may be capital, cash or bank balance, or maybe working capital. But while analyzing the statement of changes in financial position or fund flow statement, then we are to the working capital is popularly used for analyzing the changes in the financial position. Because working capital is only used popularly for the fund flow statement purpose. Now, later we shall discuss again. Now, fund, that is the meaning of fund is either capital or cash bank balance or working capital. Next, flow. flow means it may be inflow of fund or it may be outflow of fund. The fund coming into the business, that is inflow, already I have told you. And outflow means the fund going out from the business, that is called outflow of fund. Now, question arises that when there is a change of fund, when fund changes actually, so there are some transactions. Those transactions, if they satisfy that there may be change of fund or there may not be change of fund. Say for example, we may classify there are non-current assets, that is fixed assets, non-current liability, that means long-term liability. There may be current assets and current liability. Now, if there is a transaction affecting current assets and non-current assets, that is one side is current assets and another side is non-current assets. So it results into change of fund, because the working capital concept is here. The working capital means the current assets minus current liabilities, that is excess of current assets over current liabilities. That is called working capital. Now, the current assets is the component of working capital, and here in this transaction, one side is current assets, another side is non-current assets. Non-current assets is not a component of working capital, that is fixed capital. Non-current assets means this is the fixed assets. Now you see, suppose fixed assets purchased, say plant machinery purchased for rupees say 1 lakh. The journal entry will be machinery account debit to cash account or bank account. So machinery is the non-current assets and cash or bank account is the current assets, component of current assets. So when the machinery purchased, thereby the cash goes out from the business, that is outflow of fund. That means working capital decreases. So that is why there is a change of fund. That means one side is current assets, another side is non-current assets. Similarly, if there is a transaction affecting current assets and non-current liabilities, same thing. One side is current assets, that is the component of working capital, and another side is non-current liability, that is it is not the component of working capital. So obviously there would be a result into the change of fund. Now, third condition is if there is transaction affecting current assets and current liabilities. Now both the side, current assets and current liabilities. Say for example, debtors collected. Debtors, say for rupees 5,000 collected from debtors. So by collecting 5,000 from debtors, debtors amount will be decreased. That is the component of working capital. Cash collected, cash increased, working capital increased one side, another side working capital decreased. So there is no change of fund. Next condition is if there is transaction affecting non-current assets and non-current liabilities. Non-current assets and non-current liabilities. Both are the non-current assets is also not a component of working capital, and non-current liability is also not a component of working capital. So obviously it does not result into change of fund. Say for example, share capital, equity share issued in consideration the fixed assets purchased for rupees say 1 lakh, and in consideration the equity shares have been issued for rupees 1 lakh. So equity share capital account is one side, another side is fixed assets. So fixed assets account debited to equity share capital account. So both are not coming into the working capital category. So that is why there is no change of fund. Another condition is if there is a transaction affecting non-current liabilities and current liabilities, it results into change of fund. Now you see, non-current liability and current liability. Non-current liability is not the component of working capital. But current liability is the component of working capital. One side is working capital component, another side is non-current liability, which is not component of working capital. So obviously there is a change of fund. Next condition is, if there is a transaction affecting non-current assets and current liabilities, it results into change of fund. That means the one side is current liability and another side is non-current assets. So obviously, there is a change of fund. So next, how the fund flow statements is prepared. Because the time is going short, very short, we are running out of time. That is why only within 14 or 15 minutes we have to complete this lecture. That is why there is a fund flow statement, how to prepare. So there are some steps. That is the preparation of fund flow statement. Before preparation of fund flow statement, that is the statement of changes in working capital is to be prepared. Now, statement of changes in working capital, it is a summary that shows the net increase or decrease in working capital of the business. So, working capital means the current assets minus current liabilities. So, current assets of previous year and current assets of current year, and current liabilities of previous year and current liabilities of current year. So, in that way, this is the statement of changes in working capital, how to prepare. That is, what is the amount of working capital increased or decreased in the current year in comparison to last year. This statement shows in that way. Current assets, you see here, current assets, that is cash in hand, debtors, inventory, bills receivable. These are the current assets of the previous year and current year. And whether increased or decreased, that is increase or decrease column is will show here. And the current liabilities, trade creditors, bills payable, these are the current liabilities. Others item may be there, but only 4 or 5 items have been shown here. So the difference is shown as an increase or decrease in working capital. The next is determination of fund from operation. Now, while preparing the fund flow statement, the fund from operation means the amount of profit or a loss which is shown in the profit and loss account. That may not be the actual profit or actual loss of the business. There may be some extraordinary items or non-fund items which are included in the profit and loss account. So that is why they are to be adjusted while preparing the fund from operation. While calculating the fund from operation, some extraordinary items or some adjustment to be made. So we are to find out the fund from operation. The fund from operation refers to the profit earned or loss incurred from the regular business operation. Regular business operation, mind it. Only regular business operation. Some items, say for depreciation on fixed assets. Now, through depreciation is an assumption. So actually there is no inflow or outflow of fund. That is why it is to be adjusted to find out the fund from operation. Similarly, say profit on sale of fixed assets, loss on sale of fixed assets, these items are to be adjusted. Next is how the fund from operations are to be calculated. It is shown clearly here. The next is the preparation of fund flow statement. The fund flow statement is prepared in this way. That is sources of fund and application of fund. With the sources of fund, some items are shown here. That is fund from operations, sale of fixed assets, and application of funds such as loss from operations, payment of dividend. So in that way, the fund flow statement is prepared. So due to short of time, actually we cannot analyze all pros and cons about the fund flow statement or statement of changes in financial position. So in next time, hopefully we will discuss in details. Thank you.